This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind. Hey, this is Joe, and I want to talk today about MACD and the zero line, and especially the zero line reversal pattern. This is one of the patterns out of my book that I think is crucial for you to understand how to use this great indicator. I want to give several examples, and let's go ahead and get into the charts because there's different ways to look at this specific pattern. Small nuances that you can look for that can help you sort of pick it off. And then we'll talk about some of the better strategies to get in. So let's go ahead and get going. So first stock is Adobe. And so these are all stocks that had zero line reversal patterns on their weekly chart. I've got a monthly on the left and a weekly on the right. I think you want to have both when you're using this pattern, even though the trade is really taking place and the reversal pattern is really taking place on the weekly chart. We want to reference the monthly to make sure that we really have the wind at our back and a strong trend in place and support from the 18-month moving average. So when we look at Adobe, we can see that it made a peak in August and went through this long sideways consolidation phase. It was more of a sideways pattern in price. It eventually dipped down, but it was more kind of sideways. But if you notice what MACD was doing, it got really far away from its zero line and then worked its way back down. And when it eventually hit zero, that was sort of the point. That was like the reset. And then it starts the move to the upside again. Great reaction at the zero line, big bounce. This started to turn up and price had a nice reversal and turned up as well. So this is the type of thing we want to be looking at, right around this area here. And it doesn't necessarily mean we want to buy right off this low. You could do that. If you're aggressive, you can see that this is actually a undercut of a key level, and then it had a reversal bar and a little pause bar. And as this started to tick up, I think you could have played it as a zero line reversal plus an undercut and rally. So, you can do it that way. In my reports, in most cases, what I'm doing is I'm either drawing a downtrend line like this here. And in this case, because it was up 4 or 5 weeks in a row, I probably wouldn't have recommended the break of the downtrend line. But look at what happened right after. We had one lower high, two lower highs, three lower highs, four lower highs with a small little doji reversal bar and a pinch play. So this is the type of so that's the type of stock that I would be looking to really highlight at that point. So, which I did. And so if you notice also that last dip here that dropped down and caused that undercut allowed the price on the monthly chart to come down and test the 18-month moving average. And we also had somewhat of a pinch develop on that time frame as well. So this is a really nice combination and something to be on the lookout for. Don't feel like you have to jump on these early. I think you can buy the first pullback in a lot of cases. It does depend on how it plays out, though. And so this was one that took a long time to play out. Some of the ones that are a little quicker turn on a dime and just take off, and you need to be aware of that. So let's look at a couple other examples. And here's one where we came back and touched the 18-month on the second pullback. You see these two drops. The first one didn't touch the 18-month. The second one did. And you still had a pinch play in place. And in other words, what that tells me is the MACD is still above its signal line and you still have pretty decent momentum on the monthly chart. So in this case, when this came down here, I think I would have been looking to draw a downtrend line like this. Or you could have done a horizontal line across here. Either one of those are acceptable in this situation. And I don't think you have to wait for the pullback afterwards because this green bar is really the ignition bar. It's the starting of the move. And it was just breaking out at that point, all one bar. It wasn't like up 4 or 5 weeks in a row. So Just recognize when these things get down here, especially when you're touching the 18-month line. Let's look at another example, AMD. This one, again, came back to the 18-month line. We had a trend line in place here. You could have taken the trend line break, which happened to be the close above the 40 at the same time. Because there was a little bit of overrun in the MACD, you see how it overran the zero line a little bit? I might have waited for the pinch to develop afterwards, which did take place. Lower high, little pinch here, and then you could have gotten in right here before it took off. And either of those are acceptable in this situation, but you should be aware when you see this developing, you're looking for entry. This also was an undercut pattern. And so, again, when you take out a prior low like that and then reverse very quickly, I think you can be a little bit more aggressive on the trigger side of the equation. TAME, so this is a little different. If you notice, we came down to the zero line, but didn't get that close. It was sort of hovering above. And one of the things that I think you want to be aware of is when price is doing this. So we had a higher low in price and a lower low in MACD. This is the zero line reversal as this is working back down to the zero line. Now, we also, it's a zero line reversal, but it's also a reverse divergence taking place as this is consolidating. And this didn't reach the 18-month line, but we still had strong momentum characteristics. One thing I hadn't mentioned is notice the ADX on all these monthly charts, very, very strong, telling you there's probably more upside continuation coming. So when you get this kind of pattern where it's sort of like a wedge pattern, but you have reverse divergence, I think you want to be drawing in a trend line. Again, it's the same concept as a zero line reversal. And then the big green bar here is your trigger to the upside coming up through 240. Marvel, same thing. It's almost a repeat of the team. You got a reverse divergence pattern taking place. You draw the downtrend here. And then on this one, you had, instead of getting the big green bar, so let's just look at this. So instead of getting the big green bar break above, that came later, you could have gone down to the daily chart and notice when this came up and then pulled back, you had a little pinch play on the daily chart. And then you could have even bought the gap up after if you wanted a little bit more confirmation. But that would have been very helpful. It's a reason why I like to go down one more time frame sometimes. When you have this inside bar like that, a lot of times you can get an entry on the lower time frame. ANSS, another one where we came down and tested the 18-month line. MACD finally came down and tested the zero line here, but it did it in a reverse divergence fashion. And we wanted to buy the downtrend line break, big green bar to the upside. This one actually hasn't moved yet that much, but it has all the pieces in place. NOW came down to the zero line here, did a little undercut, and then a big green bar reversal. Either one of these bars would have been an acceptable entry if you were playing it aggressively because it was coming right up, came right up to the 18-month and held, or you could have bought the downtrend line break. And you could also be looking for a pullback here. I mean, it's still really not that far away from looking pretty attractive if you get a little bit of a pullback. Another reverse divergence play in this ADSK, lower low in MACD, higher low in the price action. Draw the downtrend line in place. So you can draw a downtrend line when MACD is above the zero line and ADX is low. And then most of the time we want to see the two moving averages coming closer together like so here, but you can, once you have a pivot high, a second pivot high, and you drop off of it, you can draw the downtrend in place and then go from there. This is another one that didn't quite reach the 18-month because it's been so strong, but similar pattern you want to be able to recognize. Let's go and look at Facebook. So Facebook clearly had a trend line in place that had touched it a couple times, and MACD didn't quite make it to the zero line. In this case, we had strong ADX on the weekly. It wasn't a low ADX, it was strong. that tells me, again, I want to play the trend line break. Look at this big green bar as an entry pattern, and then you had immediate follow through. So these are some of the types of patterns that I wanted to show these in several different forms because I want you to get used to looking for them. This is really one pattern that can be very, very useful in stocks that you're interested in helping with your timing, knowing what you're looking for. Be on the lookout for that reverse divergence in conjunction with the zero line reversal, and I think it'll be very helpful. Post any questions and comments, and we'll see you next time.